The mirror market effect. Claire Mercer wasn't just interested in numbers. She was interested in beliefs. As a hedge fund analyst, she watched the market every day. Most people thought prices were driven only by facts. But Claire had a secret theory she called the mirror market effect. She believed that what investors thought would happen could actually change what did happen, like a reflection shaping the object. Claire decided to build a sophisticated new model she named Reflex. Reflex didn't just track sales and profits. It tracked feelings, social media moods, headlines, and investor confidence. It was designed to find the exact point where belief and reality started merging into one powerful feedback loop. After weeks of coding, Reflex finally lit up. Pointing straight at a quiet aerospace company called Aero-Tech, the company's facts were good, but everyone was too nervous to invest. They expected the stock to stay low. Claire saw the opportunity. If she could just change the belief, the price would have to follow. Claire made her biggest call yet. She predicted Aero-Tech's value would double within weeks. Based purely on shifting sentiment, her colleagues were stunned. "You're trading on confidence, Claire, not capital." One manager warned, "In the mirror market," Claire replied, "confidence is capital." Claire's bold prediction didn't stay quiet for long. Financial news cycles picked up the story, reporting that a respected analyst expected a huge surge suddenly. Millions of smaller investors started reading the news and thinking, if Claire is so sure, maybe I should buy some Aero-Tech. Their actions weren't driven by new facts about the company, but by their belief in Claire's forecast. As more people bought based on the positive news, the demand for Aero-Tech shares skyrocketed. The price shot up higher and faster than anyone expected. Investors saw the rising price and said, "Wow, Claire was right. This stock must be amazing." The high price was now reinforcing the original belief, completing the reflexive loop. Claire watched in awe as the market danced to her tune. Her prediction hadn't just forecasted the future. It had actively created it. She realized the true power of the mirror market. Her confidence wasn't an observation, it was the initial spark. But what happens if the spark goes out? If she loses confidence, will the market crash just as fast? Claire felt a heavy weight of responsibility. The Aero-Tech price was no longer supported by facts alone, but by a collective wave of hope based on her words. She had to manage the mirror carefully. Any sudden change in her tone or a hint of doubt could shatter the collective belief. This wasn't just a game of numbers. It was a game of trust. Claire decided she couldn't stop the reflection, but she could guide it toward reality. She issued new reports, gently explaining the underlying company value that supported some asterisk of the recent price. Separating fact from feeling, she aimed to transition the price from being purely reflective confidence to being anchored in true performance. The mirror market taught Claire the most important lesson in finance. Influence and responsibility are the same. The markets listen to conviction. and conviction changes reality. Claire understood that her job was not just to see the future, but to create a stable and honest one. The end.